Good morning. Welcome beyond the SEAF model. I'm Jack Kosar. This is effective for the week of November 24th, 2025. Let's get started. SEAF signals for this week. We retain energy and healthcare and switch out utilities for financials. Healthcare continues its strength run with another week at the top spot with overall ranking of 3, the best ranking you can have. Remember, SEAF rankings are like golf. The lower the score, the better. Energy and utilities also coming in relatively strong with 9 and 10. We get a little bit of a drop-off after that with our large amount of neutrals. And then last but actually least, consumer discretionary at the very bottom here with 11s in the tactical month and the trading week. We also see a little bit of life out of consumer staples as it goes from 11 to 8 to 3, showing that positive skew that we like to see. That's heading into our heat map. Again, showing a lot of strength here with healthcare up at the top with those dark greens across the board. We have that significant 0.4 on the trading week for the top spot. 2 kind of is a bit of a drop off. 0.12 inflow at the 2 mark, and consumer staples at a 0.09. But like I said, I like to see that positive skew. I'm going to kind of highlight that a little bit later in the chart that we're highlighting that we're going to see in a little bit. Technology continues to show outflows. Overall, for the last 5 days, we had outflows out of the 11 sector spiders, with the exception being Friday. We had an inflow of 0.8 on Friday, giving the total week down assets of negative 2.4%. And again, that's if you're just looking at the 11 sector spiders as a whole. I'd like to see that positive skew here for consumer staples, seeing a little bit of life in communication services. Just to note that that's a relatively small number here at 5. Outflows, negative 0.3 at consumer discretionary. Overall, what the heat map is telling me is we're starting to settle in a little bit. We see these greens here more at the top, dark reds here at the bottom here. There's some sorting out going on a little bit outside of that, but overall showing the right direction. My favorite chart. So this is the sector spider total AUM. If you add up all the assets under management, the 11 sector spiders, throw it on a chart up here, add a 21-day moving average, this is what you have. In general, what we've been noticing over the last year or so is when we see asset flows drop below that 21-day moving average, we tend to see negative appreciation in price on SPY. This is the S&P 500 price chart down here. We are now clearly below that 21-day moving average. Obviously, we kind of held here at that 330, but below, we are seeing a little bit of sliding in the S&P 500. Now we are up today on Monday. This data runs through last week, so we will see how the week presents itself. Again, the SEAF model is not a prediction tool, but it is a tool to watch the velocity of money through 3 time periods and figure out where that momentum is in terms of the cash. But this sector spider total AUM in general has been a pretty good indication of how we see this price movement on the S&P 500. So again, see how this works out for this upcoming week. But as of right now, we are below that 21-day moving average, which I think makes it a little bit harder. As cash is more on the outflow version versus the inflow version, makes it a little bit harder to pick up on those prices. Going into our rainbow charts. We're going to start off with consumer discretionary sitting at the bottom of the SEAF ranking. We were up and favored and dropped pretty clearly down through. We have a really kind of a overall downtrend in the relative outperformance versus SPY going back to late August, early September. Right now, consumer discretionary is a place to avoid. Money going outflow, relatively significant numbers in terms of those flows coming out of consumer discretionary. Not a great place to be. Healthcare on the reverse. Healthcare sustaining its top spot with ones across the board and kind of holding that. What has that done? Nice, strong relative outperformance versus SPY, even with the market being down last week. This more of a, I guess, a defensive leaning stock with healthcare showing some strength. Like I said, this has been good to see. As you know, if we extended this chart out, there was a long downtrend for the relative performance versus SPY for healthcare. So healthcare showing some life, nice strong relative outperformance move, really going back since we hit into favored, right? So we've sustained these favored moves. We get these nice sustained relative outperformance moves. Healthcare continues to be a great place to be. Utilities. Utilities took a little bit of a hit as we kind of drove ourselves down to neutral, had a nice hard stop, and from there we have rebounded. We are now up into mid-favor territory. Got a nice positive little relative outperformance trend here. Not straight up like we had for healthcare, but up all the same. Utilities have been kind of back and forth, and utilities is an interesting animal as it seems to be playing both sides of the ball. When technology is leading, utilities comes along for the ride with that CapEx AI play. And when the market shows a little bit of weakness, it goes back to being a defensive stock. So utilities is interesting as it's definitely playing both sides of the ball. But right now showing some positive movements in utilities. Energy, seeing a little bit of life out of energy. The nice positive thing that I'm seeing here on this on the spot or the rainbow part of this chart is that we didn't immediately spike back down with energy. That money stuck, which was good to see because we haven't seen that in quite a while. A lot of times, like I said, this kind of looks like somebody's heart monitor. It's bleeping up and down, and we were losing the patient. But as of right now, that money is sticking in energy, which is, again, good to see. And what have we got out of it? A little bit of relative outperformance. Now, is this going to last for, a couple of weeks like it did here in March? Going into April, or is this going to turn back into heart attack row like we did it from January to into February? So keep an eye. Energy's looking good. It's number 2 in the SEAF model. Overall showing relative strength. So if we can continue to see assets flow into energy, and we can hold this and get a little bit of more time spent into favor, we would have a little bit more room to run for this relative outperformance versus SPY. Last and not least, like I said, I like to highlight sometimes when we have that positive skew. And what do I mean by positive skew? When we go from a deep avoid to a more of a middling number in that tactical month to a stronger number in that trading week. What I end up calling these sometimes is leadoffs. We're not in leadoff territory yet. We're still in that near avoid, near neutral, bottom neutral. But we are seeing some relative outperformance as this thing bounced off the bottom. And we do have a little bit of resistance on the relative performance versus SPY chart kind of coming up. But if we can continue this trend, get a couple of more weeks, get us into mid-neutral, up into lower favored, some positive things could happen for consumer staples after what was really a long downtrend relative underperformance versus SPY. So we're seeing a little bit of life here. Nothing too much to do yet. I do like the positive skew, but I would want to see this thing for, recommending a leadoff to get into mid-neutral, lower favored. It's not quite there yet. Again, strength of flows on that week were not as strong as I would like to see on a leadoff, but just a place to watch. Consumer staples looking relatively interesting, especially on this relative performance side of the chart. And like I said, showing a little bit of love here on that positive skew. We were in a very deep avoid on the strategic quarter, and we're starting to show some life on the trading week. String another week or two of these trading weeks together, it starts to bleed into that tactical month, and this could be a good leadoff category. Not quite there yet. I look forward to breaking down the SEAF model with you all next week. Have a wonderful Thanksgiving break, and thank you.